Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update video for April the 13th. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you haven't already, and if you'd like more frequent updates, make sure you check the description for a link where you can join the Patreon that gives you access to not just more frequent updates, but also additional content. I figured I'd sit down this morning and shoot a video because it's been a while since I've come out and, pulled the bear cloak out of the closet, if you will. I've been kind of laid back, just letting the market do its thing. And right now the market's obviously very, very excited. So I thought I'd give my 2 cents on it, right? And obviously, who knows if I'm right, but we'll see. So the main thing that happened, I guess it happened yesterday, was this pi cycle stuff, right? Now, I don't know a lot about this indicator. I was told on Twitter that it was basically somebody had, backwritten this after the fact to match the previous tops. That by itself makes me a little bit skeptical of an indicator because you can, code something to be perfect when you have the benefit of hindsight. But it is interesting, and it did call a top yesterday, and it has been accurate. Again, if it's back-coded, that would make sense. It has been accurate in the previous tops. So that kind of gave me pause for concern. But it didn't make me go full bear, right? But what has me concerned and what has had me concerned for the last few weeks, well before this pi cycle thing actually signaled, let's turn it off so it's not in the way. When a market starts to range sideways like this and it's having trouble breaking through the new levels, that tends to be a sign of distribution. Now, if this is distribution, it goes against my theory that this is just thrill and that we have euphoria left. It would mean that the market is topped out, right? So I don't want to believe that this is the case, but objectively looking at the chart, I do see the potential that this is distribution, all right? First off, the market has now been grinding sideways for the better part of a month and a half, right? That's a really long time considering how strong the whole run was. Now all of a sudden Bitcoin is really having a tough time, okay? Secondly, when we look at the volume on Bitcoin, we can actually see that the bigger volume days are the sell-off days. Like this huge day back here, like this big day here. This was a pretty big buy day here. This was right around the time that Tesla announced they bought Bitcoin, right? But other than that, it's really been the selling volume that's been larger. And on this last advance from the last, about 2 weeks ago, it's actually been on very, very low volume, and the stock market's actually been on low volume. So there's two things coming together that make me nervous, right? If we start drawing some channels, I'm going to delete everything off the chart real quick so I can just kind of do it from scratch. I still believe this is in an upward sloping channel at the moment, right? In fact, I can just show you in a 12-hour chart. It'll be nice and clean for you, right? That's the channel that it came up, started to form the channel in January, came down, came up, came down, and it's inside that channel. So that's all good, right? That's still supporting more upside. Where the major problem comes in is between the volume and the range, right? Because that starts to give me flashbacks of 2019 and wick-off distribution, right? So what I did was I put this together in Paint. I could show you on the chart, but I don't want to flip back and forth between the website and the chart. So I just copy and pasted this little schematic here onto a chart. So if we look at this, this could potentially be a buying climax back here, right? That push up to around 60K. I think it was like 58K. This could be the automatic reaction, which would be people taking profits, selling, investors will be selling in the strength, so to speak. This could be our strength test right here. Come down, this could be our sign of weakness or our sow. After that, you're typically going to get some type of upthrust if it's distribution, right? And if you really look, you almost have like a head and shoulders in here. And again, these patterns are never exact, right? Just kind of ballparking. And this is kind of a head and shoulders looking pattern. It's not a real head and shoulders, inverse head and shoulders, but it's similar to the chart, right? So this could be the upthrust, which again breaks above the old, range high, and then comes right back down. See this right through here, down, right? Should have used a different color. You can't see that. Right, down, up, right? Well, look, down, up, bam, down. Where does this go to when it comes down? It goes back to the automatic reaction, right? Which is down here. We're up here, this is down here, so that's a little different. Basically, this tested this strength test back here, okay? Back up, back down. All this looks the same as this, and then you get your UTAD, which stands for up thrust after distribution. And basically what that's doing is it's kind of testing the demand in the market. Will there be enough buyers to send this thing further north, or will this end up turning into supply and things kind of crap out? We don't know, and we won't know for some time until this thing breaks, either continues to break up or it starts to break back down. Right now, this isn't a reason in my mind to run out and sell all of my Bitcoin. What it is a reason for is to pay attention to what's happening, because if this does come back down and starts consolidating and then starts to move back down, I'm going to think, okay, this is probably turning to supply. We're now in phase D of the market cycle, of distribution, and this is probably going to head down. That's the bad news. The good news is it doesn't necessarily guarantee that this is the top of the market cycle, if it's even distribution to begin with. It's potentially just going to be a major correction, which we have not had this entire bull run. I know people will say, oh, well, we had these sell-offs. Those weren't major corrections. Yes, they pulled back like 30%. They touched, in most cases, like a 38.2 fibs. But if you've been watching the channel a long time, you'll know that I talked about this repeatedly in the past. Bitcoin has always retraced back down to its 61.8 sooner or later. Always, right? Sooner or later, it's always retraced back down there. And on the previous bull markets, during the bull runs, it would typically retrace to the 61.8s each correction. It didn't do that this time, okay? So I don't think it's a reason to panic, but if it does start to break down and it does start to resemble distribution and things like that, it could simply be that we're going to go back down and test some of those old key supports that I haven't talked about in quite some time, right? For example, the 19-week moving average, right? We haven't talked about that in ages. I haven't done a video in ages. 19-week moving average is sitting around 44,000. Again, very standard. Some people use the 20, some people use the 21. They're all very close, right? That's been a standard line in the sand. In previous markets, major corrections have come back down to that line, right? That's what we saw with Bitcoin in the past. And again, they typically, with the 61.8 also, this one didn't quite get there. But usually you had those big corrections, right? And we lacked those this time. Look at that perfect touch of the moving average and the 61.8, okay? So same thing going down, long story short, these would come down 61.8, and they would come down. That one hit the 50 in the moving average. Next one hit the 61.8, I think. Yeah, 61.8. So on and so on and so on, right? So we could just get a major correction. Where's the 61.8 at right now? Well, it's pretty high. It's way higher than what I ever expected it to be. If it did have a 61.8, it would take it down to around 26.5K. Now, full disclosure, if it goes all the way down there, it's probably a bear market. It's probably going to go lower and finally correct. If it's a parabola that breaks, we know that, quote unquote, the textbooks say that it should retrace 80%, which would put it back down around 15, 16K, right? Makes sense. Those are like worst case. Well, I wouldn't say worst case, but those are like the bear market scenarios. They might take 6 months or a year or whatever to play out. But if it does end up being just a correction that doesn't hit a 61.8 the whole move, it might just decide to hit a 61.8 of one of the smaller moves, right? For example, this move here from January through March, right? This is a very parabolic move. If it corrects back down to this 61.8, it'd be down around 41K. That would allow us to test, the moving average. It would allow us to test this old, level back here. Those would be logical things that might happen. Again, no guarantees, it's just a big maybe, right? When we look at the the RSI on this thing, it looks pretty rough, right? It looks pretty rough. It's very reminiscent of 2019 and had the double top back here, came up, it actually broke through the retest and then went down. This one had a perfect retest in the neckline, then started to move back down, and then it's had these 3, solid weeks. So I'm going to take the neckline off so you can see it a little easier. So right now it's kind of testing this. This could turn into a W or a double bottom. Look something like this, right? And if so, that's very bullish in nature. The week would need to close above the center point, or it could end up turning down and just coming back down. Again, remember, in bull markets, we typically come down and test the top of this box. What hasn't happened since this thing went nuts? We haven't come even close to the top of that box, right? These were the corrections in that last bull market. Look at this. Boom, 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 right? This time we started consolidating on top of it, which now I'm watching it for a retest. Now I'm watching it, if it gets back down to that level, does it look like it's going to hold support? Does it look like I want to take some positional longs there? Or does it look like this market cycle is probably over and we're in a bear market, right? In which case you can still make plenty of money in a bear market. And even if you're not a trader, bear markets aren't that big of a deal, as long as you don't get squirrely and start throwing money at the wall trying to catch falling knives, right? That's where people get into trouble. They start throwing money in way too soon. But those are the things I'm watching. That weekly chart, still obviously in overbought territory. So still showing some strength. But again, we slapped the volume on there and we can see that volume has really dried up these last few weeks. These are very, very weak volume bars. That's not what you want to see on an advance, right? That's what an upthrust after distribution looks like. Low volume rally, okay? So that's kind of what I'm watching. If it does continue to head north, the fib extensions are still in play, right? They haven't been busted yet. And depending on how you draw them and where you start them at and all that kind of stuff, right? If you start them from back here, basically what we were doing was we were testing the 61.8 and we still have a target up around 72K, which again, I still think makes sense because if you went back to 2019, when I was bearish, the whole thought process was we're going to go to 4K, we're going to fill in this gap, from way back, wherever the hell it was, way back here, right? We'll fill in that gap and then we'll head towards 72K, and that was based on some basic math of returns from previous market cycles, right? Each market cycle tends to return about 20% of the previous one. That's where that 72K number came from. I'm getting mixed signals. On when I look at a market psychology chart, it looks like this is probably thrill and like we have euphoria left. And that could be how we get to 72K, but I would expect it to go a little higher than that if that's the case. If this is distribution and this is indeed a upthrust after distribution, it seems unlikely or almost impossible for it to be an upthrust after distribution and hit 72,000. I'm not saying it can't go up. I'm saying if it goes up to 72,000, this wouldn't look like distribution to me anymore, right? So a couple different scenarios, and I'm just watching them. I'm not doing anything. I'm not in a big rush right now. I'm just waiting and watching, trying to make sure that I don't repeat the mistakes of 2017. I had a pretty valuable portfolio back then, and being new to the game, I held it, right? I held it, even though I felt like it was a bear market, even though I had made some posts about it being a bear market, and even though I felt like it was going to go much lower, this isn't about patting myself on the back, so I'm not going to talk about exact calls, but I felt like it was going to go lower, but I didn't have the guts to take those trades. So this time around, I'd kind of like to cash out some of my profits. I've already cashed out a lot, but I still have quite a bit of crypto left. So obviously, I would rather not give back, all of that money. So I am watching, but it's a weird deal, and it's very difficult to say what's going to happen because if this ends up being distribution, it's early. It's way early compared to previous market cycles. We should quote unquote have 6 months plus left in this market cycle. And that seems unlikely at this point, even if this isn't distribution. It looks like thrill. I can't imagine euphoria lasting for 6 or 7 months, right? In the previous market cycle, it only lasted a month or two. So this could be that this cycle is just moving a little bit quicker, and that may be because of stock market, because of the Fed, printing money, because of stimulus packages. Who knows, right? Who knows? But that's kind of the Bitcoin picture. And if you jump over to the stock market with me real quick, and we take a look at the Nasdaq, which is my main concern, is the Nasdaq. We'll look at the ETF, the QQQ. So here's the deal with this thing. It makes me, pretty nervous. if you put the volume on there, what we're seeing on the Nasdaq, or on the QQQ at least, is we're seeing this top back here. We're seeing this drop on really high sell volume, really high sell volume. The selling volume was the highest since March of 2020. And then we saw an initial, reaction where buyers stepped up and said, yeah, I want to buy here. But then as the rally continued, the buying volume is dropping off. And it's like, okay, well, maybe we shouldn't be buying here, right? Still pretty high compared to back here. So, I'm not ready to go full bear and be like, okay, I'm going to short the Nasdaq and all this stuff. But these are the things I'm thinking about. I'm thinking about how cliche would it be for this to end up being a huge double top right here, right? And then, of course, if the Nasdaq double tops and starts to move down, then I think that's going to take crypto down with it. I don't think Bitcoin continues to go up if the stock market's in trouble, okay? One thing I will say, and this is really something that it's, sometimes you know things, but knowing something and doing the right thing with that information aren't the same thing. When a market is trending, when it's really trending, not chopping around, consolidating, but when it's trending, it will typically continue to trend in that direction until something knocks it off course, right? The technicals will often start pointing to some type of reversal, and then some event comes along and it's like the catalyst that sets everything on fire. So a perfect example of this, Bitcoin 2013, technicals start looking bearish. All of a sudden the Mt. Gox happens. Boom, Bitcoin completely collapses. 2017, Bitcoin starts putting in sell signals. All of a sudden CME, starts shorting the Bitcoin, and, they launch their futures and boom, they start shorting, right? Bitcoin crashes. Go back to March of 2020, that drop had been predicted for several months by several different people, right? Not just me. And it was, if I went and showed you the channel on this, I don't think I've ever showed anybody this in the last few months. So for newer people to the channel, they don't remember this. But if you were watching the channel, right, in 2019, you'll remember this, right? We had this channel drawn on the chart and we were just following it down, right? When it got through here, I was talking about, hey, be careful if you're bearish, there's going to be a bounce incoming. Then I got blown up on the bounce because it went a lot higher than I expected. Tested the top of the channel, started moving back down. Then we had November, same thing, testing the channel, started to move back up. In here, I started to wonder if I was wrong because it broke out of the channel, but it looked like, some type of like secondary trend. It looked like it was going to be down, corrective bounce, and then more downside. And then if you look at this chart, look at this. March 13th, it hit the bottom of this channel again, and that was right around 4,200 bucks, which is what I was actually calling for, with 4,200, not 4K, not 3,800. I was saying 4,200 was where I thought it was going, right? But why did this happen? Well, you can say it was COVID and all this stuff. Maybe that lit the match, but look, you had a head and shoulders, right? It's not like it wasn't showing technical signs that was getting ready to break down. That was already saying, hey, we're going down, folks. And then, COVID became the excuse and, it rolled out of bed. So that's kind of what I'm watching for too. We're starting to get these technical signals, these low volume rallies, these, charts that look like distribution, these charts that are showing potential double tops. And again, you go back over the stock market, we're seeing a lot of stocks, selling off. So if you look at, for example, Tesla, people are all gung-ho on Tesla, and Tesla's in the news, and Tesla this and Tesla that. But nobody's talking about the fact that Tesla is currently down 22%, and it was down 40%. That's one hell of a correction, right? 40% drop is massive. You go look at things like, MicroStrategy, which is Michael Saylor's company, right? This thing collapsed over $700 a share, 59%, right? That's a problem. And you're not seeing people rushing to buy it back. You had this this was huge buying volume here, right? But you had this was probably a short squeeze, by the way, but you had this really high sell volume and people are just not rushing to buy it back. You look at all of these markets, right? You're not seeing the buyers step back up. You're starting to see some of these big stocks that were like the darlings over the last 12 months, they're just completely collapsing. NIO's another one. This was the quote unquote, Chinese Tesla, if you will. Same thing. Ran all the way up from around $1.50, $2 to nearly $70, 3,500% returns. And now look, boom, 52% collapse, right? This one's a bitter pill for me because I actually shorted NIO up around $64 and it pumped and ended up stopped. Maybe I shorted at $62 because I think it was this green candle got my ass, right? I shorted the thing, it pumped, ended up stopping me out at like $64 and then collapsed. So that's bittersweet, but that's, trading. But point being, when you start looking at the stocks, we are seeing a lot of profit taking. If you go look at the fear and greed index on the stock market, so we're sitting in neutral. I don't care about that at all. What I care about is stuff like this, right? I want to look at the chart. And when I see this chart, what I see down at the bottom here is I see this perfectly horizontal line of support, right? You can draw a flat line across there, and it would have told you to buy stocks in March of 2020. And I see this series of higher lows. I could draw a line, if this was on TradingView, I could draw a line connecting all these, and there's my uptrend. Well, the problem is this is trying to turn back down again, and it's already been tested. This was the fourth time that line was touched, depending on you count it, right? We have 1, 2, 3, 4 points, 4 pivots. If it comes back down to that, typically your fifth touch is not a great place to trust that line, whether it's support or resistance. They have a high likelihood of breaking, which means that the stock market, again, this is just more reasons that stocks look a little bit sketchy. Another thing you'll see in the stock market before a big move down is you'll start seeing people taking profits. One of the ways that you'll notice this is you'll start seeing less and less of, the market itself will kind of flatline. It'll kind of move sideways or slow down. So it won't be crashing. It'll just be slowing down and it'll look like everything's okay. But then if you go look at the stocks that are making all-time highs, you'll see a lot less stocks making all-time highs, right? And what's happening is people are moving their assets around. Not everybody wants to completely cash out of the market. A lot of people will simply buy puts to cover their stocks that they're holding, or they will sell calls, covered calls, right? So when we look at stuff like this, for example, I think they have this on this site. Here you go, stock price strength, right? Number of stocks hitting 52-week highs exceeds the number hitting lows, but it's at the lower end of its range, indicating extreme fear, right? So there's signs. There's signs of technical weakness. Again, it doesn't guarantee that everything's just going to completely collapse overnight. The last time the market went down, people were like, oh, it's the fastest drop in history. And it was, but it's not like it all happened in one day, right? It's not like the market just one day it was good and the next day, all of a sudden it fell 30 or 40%. That's not what happened, right? Look at the Nasdaq. We'll just look at this one chart. This thing started moving down in February. Down again in February. I remember posting a chart saying it's got to get back over this key level, blah, blah, blah. Otherwise, we're in trouble. It tested this level, right back down, and then collapsed. This was like almost a month and a half or 2-month process, right, of moving down. So, point being, I don't think it's one of these cases where if you don't sell at the exact moment, you're completely screwed and, everything's just going to fall apart. I think that if it does start to move down, that it'll even if it cuts deep, there's going to be signs there that, hey, I probably need to get out, right? So for example, on the stock market, one sign that I would be watching for is if this double tops, which is a huge if. This week is nowhere near over, but if it were to look like a double top, does it break this neckline? Only then when I start to get super concerned about the stock market, right? Right now, it's just more about seeing some signals, seeing some signs, and making sure that I'm open to those signs and not just burying my head in the sand and saying, no matter what, I'm not selling my crypto this time, right? Because that's what happens to people. What happens is you didn't buy at the right time, or you didn't buy as much as you wanted to, and now you've made a bunch of money on paper, unrealized gains, but you don't want to sell it because what if you sell too early and blah, 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 right? And then what ends up happening is people hold too long and they give everything back and typically more on top of it. So anyway, for me, I wouldn't call myself a bull, but what I would call myself is a hopeful hodler, if you will, right? I'm still trading. Trading hasn't changed. Trading doesn't change. Trading is just trading, right? Day-to-day trading doesn't change. But as far as like that HODL portfolio, like I said, I did have a few Bitcoin worth of alts that I was holding in case I was wrong. Those alts have went absolutely ape shit crazy. They're up way bigger than Bitcoin is. I know a lot of people switched over to Bitcoin last year, and it wasn't a bad idea to switch to Bitcoin and then switch back to alts at the right time. I didn't switch around. I just stayed in the alts. I had a little bit of Bitcoin, and then I stayed in the alts, and the alts have done really well. Like, stupid well. Like ADA, for example, is up from like a penny in March of last year to like $1.30, right? So it's like 130x. You have alts like, I had OMG, that was, one of my bigger holdings. It was down to like 30 cents, and I think now it's around $9 or $10, so you got a 30x there. It just had a bunch like that. And again, these aren't the places where I bought, guys. This isn't like, oh, pat yourself on the back about how good you are. No, these are coins that I was holding, most of them I was holding for the last 3 or 4 years. I bought them in 2017 and 2018, right? All I did was I sold them for losses, and then I bought them back so that I had a new cost basis, right? I took the tax loss to offset some of my trading wins, and then I bought them back. So on paper, it looks like I'm up like 3,000%, but in reality, it's nowhere near that, because I bought them a lot higher than those prices. But anyway, this is why I stopped doing videos right here. This video is 30 minutes long, depending on how I edit it. So I get off on these tangents, and the videos are just way too damn long. They take up way too much time. So if you do like getting updates from me, like I said, you should check the description. You can join Patreon. My updates in there are mostly charts with a paragraph or a couple sentences explaining what the chart is. I don't do a lot of videos anymore. But yeah, please remember, I am some guy rambling in a spare bedroom at 6 o'clock in the morning. So nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice, or a licensed financial advisor, which I'm not, before making any type of investment in cryptocurrency, the stock market, precious metals, rocks, sand, whatever it is, right? Again, if you enjoyed the video, please make sure you give it a thumbs up, subscribe to the channel. And as always, this is James with Crypto Common Sense, reminding you to please trade safe.